Alrighty, we are getting pretty damn close to making you boys into some fucking good ass traders. We have, we have about two concepts left, including this one, for you to have pretty much all the pieces. I'll look at my plan right here, but yeah, let's fucking look in the notes. Couldn't go through my fucking shortcuts, so I'm gonna have to actually find it. So, shit. Yeah. We are fucking kicking it, guys. We're fucking getting good. We have SMTs next. Then after fucking SMTs, we got fucking goddamn high time frame analysis, and then maybe we'll do a daily bias. And actually, wait a second here. We will put this right here because this is putting y'all into some game. Let me put this in here while I'm thinking about it. Distribution, and then all right. I mean, yeah, dude, we got this goddamn. I need to sip my coffee. Probably guess what this shit is. White chocolate, fucking raspberry. Good as fuck. But no. So we have SMTs, and then after that we'll do high time frame analysis. But after that we'll do like a daily bias and explain some more session rules, shit like that. But dude, after you learn this fucking SMT concept and then daily bias, you will literally have everything you need to get on the charts, start like paper trading. I'll do a video on that too. I'll probably do that after. Realistically, what we'll probably do is once we get SMTs, fucking, what's it called? Daily bias, fucking multiple time frame analysis. Once we get that done, then we'll go into other things like how to set up a paper trading account, how to set up a brokerage account. Then we'll go to news. Actually, no. Yeah, we'll just do it this way. We'll go into news. We'll go into fucking just all that shit, and we'll keep figuring out more things to do. But for the base strategy, the main strategy, it's literally like, boys, this is fucking it. It's literally just fucking what's it called? It's literally just SMTs, multiple time frame analysis, and then I'd recommend the daily bias. I'd recommend looking into that shit. But I mean, this is these last three concepts. You can be a pretty damn competent trader with just these. And if you want to get even better, I'll keep posting and I'll keep putting y'all on to everything I fucking know. I mean, you learn everything I know, then you'll be as good or better than me at trading. But yeah, the definitely most important videos are the ones up to this point, and then these next three videos um on trading strategy. And then once you have that shit, dude, you are gonna be one hell of a fucking trader. Then you watch the other videos, you'll be even fucking better. But yeah, once you get this shit down, holy fuck, dude. I genuinely think everyone who's watching this shit, I think I will raise the next generation of fucking rich traders. So, let's fucking get into it. Ooh, that's actually a, put this shit in here too, actually. I apologize. I'm getting carried away because I'm just like, the ideas are fucking flowing to teach you guys how to like get like me and like how I started and shit. So I'm just like, I'm thinking because I care about y'all. I want y'all to succeed. So I'm just thinking every single thought, like what I could really teach you, whether it's big or little. I'm just writing that shit as soon as I think of it, whether it's a fucking video. I'm putting this shit on my laptop notes if I'm in school. I'm fucking like, I'm just constantly thinking about this shit, this and trading. But I apologize for that long ass intro. Let's actually get into this shit. So, SMTs, pretty damn basic concept. So, an SMT, it's literally just market following charts, like charts being alike to each other, because then you can establish a leading and lagging pair. A leading pair is the pair that makes the move first, and a lagging pair is the pair that makes the move second. So this is like NASDAQ and which I might trade it in the future, but as of right now, I'm making a good amount from this shit. It's really predictable, so I like this shit better. But NASDAQ and S&P 500, that's probably like the most popular, the biggest SMT pair where they correlate to each other and you can establish a leading and lagging pair. So SMTs are very useful, especially with GBP JPY, because one pair is going to be making liquidity moves and sourcing liquidity while the other one already establishes a direction. So because GBP JPY, because of how volatile it is the most volatile fucking forex pair there is. So because of that, SMTs will fucking help you a shit ton, dude. I mean, if you can just get an SMT, you can literally just like use one or a few of these other concepts and it will work if you just have the SMT with one of these two pairs. So like most of the time when I'm actually trading, I will go off of a reactionary zone that makes sense. So like a fucking 62, like a fib extension or retracement, so 120%, 62%, 79%, shit like that. I'll look for that. I'll look for a retrace into some liquidity, so like order blocks, fair value gaps, or just like a sign of a liquidity sweep, something like that. And then I'll fucking I'll just look for an SMT. So I will either look for GBP USD, so it's called cable, to be mirroring the same direction. So, for example, would we use GBP USD as a main fucking SMT pair today? No. Why is that? We're going up here. We're going down here. But if you look closer, so this is from Wednesday to now. So we look from Wednesday to now. So no, we wouldn't really want to be actively using that. Euro JPY, that's very similar to GBP JPY most of the time. This is called EJ. This can be referred to as GJ. So you can see uptrend here, uptrend here. This is a good indicator for that SMT concept. So damn, we gotta switch over to the water. Right out of the coffee. Fuck. And I got a fucking psychology video. Y'all are lucky I fucking care about y'all. But no. So, how would we really apply this? So, an SMT is just like every other market concept where it's all relative. So, just like major trend SMTs apply, so do fucking minor trend ones. So, like, this goes all the way back to Tuesday 21st. So, as you can see, it's like I was talking about, there's more volatility. So GJ moves like a lot more. It swings up, swings down a lot more, but EJ is like more stable. So that's why you can kind of see what EJ is doing. And then based off of that, you can make more money on GJ because the moves are bigger. So we said 21st. Yeah. So 21st of October. So right here. So you can see essentially mirror each other. So you can use an SMT. So like I said, it's all relative. So there's micro SMTs, small time frame SMT, medium time frame SMT, high time frame SMT. Don't let that shit confuse you, dude. Just think what's more applicable. Like on EJ right now, would we use high time frame? Probably not, because yeah, it's similar, but there's a lot more swinging and volatility compared to if we shrink down to the 1 day. So what was today? Thursday, right? Yeah. So Thursday, we go to right here. And then we also go to Thursday right here. This is where you see for the day, overall uptrend. So yeah, it's going to be valid. And then same thing with GJ, or I mean, cable. So these are literally the only two pairs I use for SMTs. For GJ, you can use other pairs. For an SMT in a correlation with GJ, you can literally use any pair that has GBP as the top quote or JPY as the bottom quote. Why do I use these two pairs? It's back tested, it's analyzed, not even by me, by traders that have been trading way longer than me. That's a big thing too. Trust people who know more than you. Like, just like you look at my shit and look up to me, I do the same thing with bigger traders like ICT and whatever. But do I do the same fucking shit they do? No, I do what makes sense to me. I've altered their strategies to make more sense to me. Like, my biggest one was TJR at the start. Do I just trade off of liquidity sweeps, breakup structure, fair value gap, order block? No. I've got my Fibonacci, retracement and extensions I use for me, my key levels. I use SMTs, which he does use, but I trade Forex. He trades futures. So you kind of just gotta, and this is really applicable to life too, you have to pull bits and pieces, whether it's trading, life, whatever, from other people. Because just like in my previous video, you would take relationship advice from someone in a good relationship, but you wouldn't necessarily take financial advice from them. It's the same thing. You can take topics like how I take shit from TJR, and I use shit from that he taught me that I learned from him in trading Forex. You can take shit from that, whatever makes sense, whatever's applicable to both pairs, but also do a little bit of your own research, figure out what's going to be applicable, what's not, what's going to work for you, what's not. But sorry, kind of tangent there. So Thursday, right here, are we using GBP USD? We could. So then we'll shrink down even more. So I guess this kind of goes into multiple time frame analysis here. So if you don't understand it, just wait for my video tomorrow and then come back to this. Like if you feel like you're losing touch here, but you can see high time frame, high, low, high, this low. We could get a support and resistance concept here. Normally that isn't how it works, but we could. Or supply and demand, all of that shit. So, whatever. Let's look here. What's the high time frame doing on here? Nearly identical. So, we could listen to that. What's the high time frame doing on here? Downtrend. So, high, low, high, low. So, you got to kind of use some common sense here. So then we go to the kind of medium time frame, I guess I would say. So like we have this low here, this high, this low, this high, and then this low. So we're thinking uptrend there. This high, this low, this high, this low. It's not established yet, but you can infer. So you could use that there for medium time frame. And then we're a little more zoomed in on here, but this high, this low, this high, this low. So is that correlating? Not really. So then we shrink down to, this might sound repetitive, but this is literally exactly how I use this combined with multiple time frame analysis, which I will teach literally next video, and then you will fucking become rich from trading, from watching this shit. So then we go down to the shorter time frame. High, low, high, low, high, low, high, low. Downtrend for a short time frame. and we have high, low, high, low, high, low, high, low, high, low. So you can see we are mirroring exactly on there. And then I think if we shrink down to this, we're actually, so I wouldn't personally trade on this just because of the night hours, but you can see high, low, high, low, high, low, high, low, high, low. So now all of a sudden you can see the market structure on the short time frame is the same for all three pairs right now. So if you can get two SMTs on a trade, that is pretty damn high confluence. I'm not gonna lie to you. If you get two SMTs on a trade, you don't need a lot more confluence from the other concepts. Like, that's literally all it is. It's just making as many confluences as you can, and that's why you want to learn multiple different things like I have, like a Fibonacci retracement, liquidity concepts, fucking SMTs. I think SMT is liquidity. Smart money traders use it, but I don't think it's necessarily a liquidity concept. And then, what was the other big one? SMTs, liquidity concepts. Oh, and then multiple time frame analysis. And it's literally, you want to learn all those different ones because then you can, instead of just like doing one strategy and sticking to it, it is technically one strategy, but based off of this strategy, you can just locate one point in market where it's probably going to flip, and then one point that flip is probably going to lead to, or a couple points that you could take partials at. So as we were kind of saying, high, low, high, low, high, low. So all of a sudden, if you wanted we're trading with the trend. So unless you had other confluences, this would be the SMT right here. You want to wait for the high to break this high. If you're trading on GJ, that's what you want on there. Obviously, for the actual break of structure, you're going to need it to be right around here. But no, I mean, you get that break of structure matched by an SMT here, and then on this pair, you'd want your SMT. Low-key, we won't do that. We'll just throw this right here. You'd want your SMT right here if you're taking a trade to the upside, which is the highly probable trade to make here. But like you can see it right there. So I mean, if you get an SMT here, an SMT here, and then you get a break of structure here, what does this SMT really teach? Like, let me break it down to bare bones, explain exactly what this means. If you get an SMT, it means market's actually moving in that direction for a reason. It's seeking out deeper liquidity. So, for example, if we got a break of structure here, but no SMT on either of these pairs, for example, on GBP USD, if we just broke structure here like we did, and then we have no SMTs here, you can infer that it's more of a liquidity grab, and we're going to go in the opposite direction. So, by using an SMT, you can confirm that market wants to move in that direction, and we're seeking higher liquidity. So, if we had SMTs on, I don't know why I pointed to that, if we had an SMT on EJ and cable, and it was to the upside, right? Then one could infer that probably without looking at any other confluences, one could infer we're most likely going to retrace. What I would think is we're going to retrace between this 382 and the 62% range, and probably right to this order block. That's what I would infer for it. And then if we actually like broke that structure, then we could aim. If we broke small time frame structure, we could move on to medium time frame structure. Fuck, I don't want to teach this much because I don't want to overlap. But you'll see it on the high time frame and all of that shit tomorrow. But if we broke that structure, we could basically just be like, okay, so we'll probably retrace to 79% extension, 62. There's also an order block there, so you could make a case for that. But no, an SMT is literally just a leading pair making a move, and then your lagging pair following that move, so that you know it's not a liquidity grab, and it's an actual, I don't want to say guaranteed, because nothing's guaranteed, but it's a more guaranteed move. It's a more like put together move, more likely move. And what are we doing when we're trading? You're not like, this trading is so much different from an actual job, because it's basically and I hate this because it sounds like it's a scam or whatever, whenever you put it like this, but trading is literally just gambling, but you have really high fucking odds if you know what you're doing. It's basically, if you get all of these confluences, you're going to have like a 90% chance of hitting this. So say you're risking $500 to make $5,000 and you have a 90% chance of that move hitting. Why would you not take that? You know, if you could walk into a fucking, and this is why trading's so good. If you could walk into a casino and risk $500 for a 90% chance at $5,000, then the casinos would all go bankrupt and everyone would be rich. So that's basically what you're doing by learning how market moves and like how to trade. You're basically learning how to gamble and win almost every time. It's like, I mean, I don't want to compare it to anything because anything I compare it to is going to be so less likely, but yeah. I mean, it's literally that simple. Um, but yeah, so for SMTs, it's about it. You can get one smaller type of SMT. So say we got everything we want, and now we're looking for a small time frame trade, which I will do every once in a while. I'll look for a that's most of the time what my trade strategy reflects off of. I try to trade with like this medium time frame type of thing, and then I try to like bet that small time frame structure will get broken. Um and how I'll predict that is I'll have like a place where it makes sense for price to reject from. So like a fib extension, fib retracement. Um and then yeah, like I want it to go with medium time frame bias. High time frame bias always will help. But bad high time frame, like conflicting high time frame, isn't going to affect it a shit ton. But it kind of just, if you have high time frame moving with you, you can kind of chop off one of those other confluences. Um, so it's kind of something that will only help, not hurt, if you use it right. Um, Regardless of if it's in favor of you or not. But so say we had our medium time frame. Oh fuck, this is overlapping so much to fucking multiple time frame analysis, but whatever. So say we're looking for this break of structure to occur, a micro break of structure. So we just literally all we need is this high to be taken. Then we would just look. And if this high, I wouldn't count that dogi as a high. If this high got taken, and then this high got taken, which it did on the micro structure standpoint, and then we get the break of structure followed there. Pretty damn high confluence trade. So homework for tonight. I kind of have a neck beard right now. I gotta shave after this shit. But no. Homework for tonight. Whether you want to trade futures, I would really, especially if you're just starting out, I would just recommend doing Forex. Um, or yeah, Forex. Forex is like the most predictable and like the type of trading that structure works the most on. So, and like strategies will work the most on this. So I would recommend just doing this, but basically homework for tonight, find if you're on GJ or any Forex pair, look up on ChatGPT or Safari, figure out the two. Even if you can't like mentally process two, just use one and look up whichever one or two pairs complement your pair the most. If it's on Forex, look up whichever one or two will actually work for SMTs and like will complement your pair the most. Figure that out. If you're on futures, um, or like we'll just use because I don't like to touch futures much, but if you're on like fucking Nasdaq, just it's gonna clearly be the S&P 500. So either way, figure out one of those two, and then go from there. This applies to both. Just figure out figure out 3 examples of fucking of like SMTs being useful on each time frame. So I don't mean every time frame like all these big ones. Just figure out, like a fucking massive structure point. So like from this low to this high, figure out 3 SMTs between your complementary pairs for that. figure out 3 for the smaller structure. So like this high, this low, this high, or I mean this low, this high, this low, this high. Figure out that. Then go to the smaller structure, and then this low, this high, this low, this high, this low, this high. 3 of those, like I said, obviously, and then just 3 microstructures. So literally like fucking high, low, high, low. Figure out 3 SMTs with that, and then extra credit would be use an SMT with your other, like build up every single confluence I've taught you and use this matched with enough of the other ones that you think it would be a successful trade, and either go and replay trading or just do it in your head, look at it, and find 3 examples of like successful trade ideas from using your other concepts paired with this SMT concept. Y'all have a good one.